Hey guys, this is Kritesh and welcome to TradeBen's YouTube channel. In this video we are going to discuss how to find the intrinsic value of stocks using Graham number. So if this is something that you are interested in, then please watch this video till the end. First of all, if you are new to this channel, please subscribe. We publish new interesting investing videos every week. Now before we start, let me give you a brief introduction about Benjamin Graham. Benjamin Graham was a British-born American value investor and economist, and he was a very sincere value investor. He is also referred to as the father of value investing, and he was a professor at Columbia Business School. He is the author of two of the best-selling books named Security Analysis and The Intelligent Investor. I would highly recommend you to read the book The Intelligent Investor. This is also many a time considered as the Bible of the stock market. So if you haven't read this book yet, I will highly recommend you to read it. Next, he was also the mentor of the legendary investor Warren Buffett. If you do not know Warren Buffett, then it's a different scenario, but he is the third richest person on this planet Earth. The thing is that Warren Buffett attended Columbia Business School, and there he met Benjamin Graham, and he learned the concept of value investing from Benjamin Graham. Benjamin Graham was a very strict follower of value investing principle, and he liked to purchase quality businesses when they were trading at a significant discount. And in his book Security Analysis, he has mentioned one specific formula of how he picks stocks, and which became very popular among the investing population. So this is a screenshot of his book, and this is the formula that he used. Value is equal to current normal earnings into 8.5 plus twice the expected annual growth rate. So this is what we are going to discuss in this video. So how to find intrinsic value of stocks using Graham formula. The original formula that Graham used in his book was V is equal to EPS into 8.5 plus 2Z, where V is the intrinsic value, that is the true value of a company. EPS is the earnings per share for the last 12 months. 8.5 is the PE of the company at a zero growth. I mean, if the company is not growing at all, then its PE was considered 8.5, and here G is the growth rate. So overall, the two important inputs of Graham formula was EPS, that is earnings per share, and G, that is the growth rate. Anyhow, the thing is that this formula was originally used in 1860s, and a lot have changed from Graham's time to that of the present time, and that's why this formula was revised a little in order to get the intrinsic value in the current time. So the original formula was EPS into 8.5 plus 2Z, and in the revised formula it was multiplied by 4.4 and divided by Y. So what is 4.4 and why here? So here 4.4 is the risk-free rate, or you can say that the AAA corporate bond yield at the time of 1962. However, this bond yield is not the same in the current time, and that's why you have to divide by Y. Y is the current bond yield at the present time. For India, it is currently 7.3%. On the other hand, if you look at United States, it's around 3.5%. Anyhow, the conservative investors have even changed this formula a little in order to find a better intrinsic value. So here you can see that this is the formula that Benjamin Graham used for valuing stocks, where V is the intrinsic value, and it is equal to EPS into 8.5 plus 2Z into 4.4 by Y. Now the thing is that this 8.5 is the PE ratio for the zero growth company. So many investors, what they do, that instead of 8.5 they use a conservative value of between 7 to 9 depending on the industry and the company that they are investing. So here you can say that from 8.5 many people use a value of 7 to reach a conservative intrinsic value, and similarly G is the growth rate here. Now the thing is that at Benjamin Graham's time, most of the stocks were not growing at a very fast rate. I mean, at that time most of the stocks were either utility companies or PSU, public sector companies, and the growth rate was not very fast at that time. On the other hand, currently there are a lot of companies who are growing at a rate of 15, 20 or 25%. So if you use a multiple factor of 2 which are going at a very high rate, the intrinsic value may turn out to be little higher than what it should be, and that's why many conservative investors use a value of 1 instead of 2. So here what they do, that they use a value of between 1 or 1.5. So overall the Graham's formula gets adjusted here, and instead of 8.5 it's conservative to use 7, and instead of taking 2 as a multiple of growth, many investors use 1 for finding the value. Now before we calculate the intrinsic value of a company using Graham formula, let's also study first the pros and cons of Graham formula. The biggest pros, the biggest benefits of using Graham formula is that it is very easy and straightforward. I mean, you do not require any difficult input or complex calculations to find the intrinsic value of a company using Graham formula. All you need is the EPS of the company, earnings per share, and its growth rate for the next 7 to 10 years. And in few simple calculation steps you can find the intrinsic value, that is the upper range at which you can purchase that stock. Anyhow, no valuation method is perfect, and there are also few cons or disadvantages of Graham's formula. For example, two of the biggest inputs of Graham formula is EPS, earnings per share, and the growth rate. And the thing is that EPS can be manipulated a little by the companies using the different loopholes in the accounting principles, and in that scenarios your calculated intrinsic value can be a little misleading. Similarly, if you are using an unrealistic growth rate, then again your calculated intrinsic value can be incorrect. And the third one is that like almost all the valuation methods, this formula also ignores the qualitative aspect of a company. It doesn't also cares about the industry of the company or its management quality or competitive advantage or different qualitative aspects of the company. So whenever you are using the Graham formula, do not blindly trust on the formula. Even if the formula is saying that the company is undervalued, still you need to look at the qualitative aspects of the company. So these are the pros and cons of using Graham's formula. And now that you have understood the Graham formula, let's use it for finding the true intrinsic value of an Indian company in the real time. So let's take an example of Hero MotoCorp. So for the Hero MotoCorp, the EPS for the trailing 12 months is 186.29, and its expected growth rate for the next 5, it's around 10.61%. So let me also show you here where you can find these data. If you go on Screener website and add a quick ratio, you can add a EPS here, earnings per share. So here you can see that the EPS of Hero MotoCorp is 183, and similarly if you scroll down here you can again see that the EPS of a company for the last 10-12 year, in the last 5 years it has grown from 94 and EPS of rupees 94.56 to a EPS of 185.15. So using calculations here, I have found that the growth rate for the last 5 years in the EPS was around 14% for the Hero MotoCorp. But being a conservative investor, we have to take some margin of safety. So here we are taking a 25% margin of safety in the growth rate. So if you take a 25% discount on the growth rate, it will turn out to be 10.61%. So you can consider 10.61% as a conservative growth rate for the next 5-7 years for the Hero MotoCorp. Now if you use this formula and put the EPS, that is 186.29, and expected growth rate of 10.61 in the adjusted Graham's formula, here we are using 7 as the risk-free PE and we are using 1 as a factor of growth. And when you put all the inputs in this formula, price of Hero MotoCorp turn out to be rupees 1977.3. Now this is a very conservative intrinsic formula that we have used, and we have used very conservative inputs to arrive at this intrinsic value. And the thing is that currently Hero MotoCorp is trading at a price of rupees 2961 with a PE of 15.90, and from our calculations of Graham formula we can say that its true intrinsic value is around 2000 rupees. So it is currently overpriced at the time of writing this post. Now let's take another example of an undervalued company. Here we are looking about Manpasand beverages. So if you go on Screener and search Manpasand beverages, and here you will get the details about the Manpasand, and its earnings per share is rupees 8.70. So here we'll be using EPS of 8.70. I think the EPS is little different on Yahoo Finance and Screener, but the thing is that it's very small number, so we can still go for it. So here you can see that the EPS is 8.74, and for the expected growth for the next 5 years, you can just go on Yahoo Finance and go on analysis section, and here you can, if you scroll down, you can see that for the next 5 years it's saying that the expected rate is 33.85. This is what the analysts believe that this company will grow. Now it is 33.80 is a very high growth rate. I mean, it's really aggressive for any company to grow at that very fast rate for the next 5 to 7 years. Even for the last 5 years, you can see that the growth rate was 27.34% for Manpasand beverages. So let's use the historical value. So historically we can see that for the last 5 years it was going at a rate of 27.34%, but again 27.34% is a very aggressive growth rate. So what we want to do, that we want to take a margin of safety of 30% on the growth rate. So if you have a discount of 30% on the growth rate of 27.24, we arrive at a conservative growth rate of 19.07%. This can be the expected growth rate of the company for the next 5 to 7 years. And if we use these values, that is the EPS of 8.74 and the growth rate of 19.07% in the conservative Graham formula, we will arrive at the intrinsic value of the company. And the intrinsic value of Manpasand beverages is coming out to be rupees 137.3. And if you check on Google, currently Manpasand beverages is trading at a price of rupees 97. So from Graham's calculation, you can say that this stock is undervalued. But again, like we said, here we are just doing the qualitative analysis. We are not looking at the quality of the company, like their management, competitive advantage, their business, their industry. So even if it's saying undervalued, still you have to do the study and still you have to find out what is the qualitative aspect of the company. So yes, looking at the Graham's formula, we can say that Manpasand beverages is currently undervalued. Now the thing is that you do not need to always do the calculation yourself. At TradeBrains, we have also launched a free Graham calculator that you can use on our website to find the intrinsic value of a company. So let me give you a demo. If you go on TradeBrains website and search calculators, here you can see Graham calculator. We have also offered different online calculators like DCF calculator and fair value calculator. But in this video, we are going to discuss about Graham calculator. So if you go on Graham calculator, so here you can find a simple Graham calculator. On this calculator, we have used this formula. But again, this is not adjusted Graham formula. Like we discussed in this video, many investors like to use 7 as the P for the no growth, and similarly many investors use a growth multiple of different factor. So if you want to use a customizable Graham formula, you can click on this link. Here you can customize the Graham formula. For example, here you can find all the different inputs like the EPS of the company. You have to input expected growth rate and the P of stock with 0 growth rate, which is currently taken as 8.5, but you can change this input from 8.5 to 7 or 7.5, whichever you prefer. And similarly, the growth rate multiple, you do not need to take as 2, you can take it as 1. So let's again do the calculation for Manpasand beverages. So for Manpasand beverage, the current share price is around 97, and the conservative expected growth rate that we found from our calculations, that was equal to 19%. So we are taking 19 here. And if you scroll down, you can see that the P of the stock with 0 growth, we are taking a conservative value of 7 here, and growth multiple we are taking at 1. And after calculation, we can see that the intrinsic value of the company is coming out to be rupees 136.3. For negative sign, it means that it is currently undervalued. But like we said, this is only the quantitative analysis of the company. You also need to perform the qualitative aspect. I mean, what is the quality of the company before investing. And just a quick disclaimer, all the stocks discussed here are just for the educational purpose, and this is not for a stock recommendation. So this is how you find the intrinsic value of a company using the Graham's formula. So let me quickly summarize this video. In this video, we learned how you can find the intrinsic value of a company using Graham's formula. This is a very simple and straightforward approach, and anyone can use this formula to find the upper value of the purchasing rate, like what should be the maximum price that they should pay to purchase that stock. I hope this video was useful to you, and please check out the online calculator on TradeBrains website. You can use it to find the intrinsic value of different companies, whichever you are investigating or whichever you are researching. And that's all. Please hit the like button if you like this video, and subscribe to the channel for more interesting investing videos. This is Kritesh signing off.